Lyft lost $911 million last year, and so we went back and looked at what other startups have done just over history. I always thought .com was sort of full of giant losses, but no, this is sort of far and away the biggest 12-year loss, 12-month loss.
Eliot, what about Facebook and Google back in the day before they IPO'd?
Yeah, so both of them actually were turning profits by the time they IPO'd. Facebook's, I think, was pretty substantial.
Wow, Deirdre, so we're now focused on companies that it's one thing if you're losing money because you have you're growing so quickly and you have a pathway to big profits. It's another thing if you're losing money kind of because the venture backing was your business model and all of a sudden you have to make money on your own without that.
That's right. And part of the reason they've been able to grow so quickly is because they are burning cash at this rate. And really, it's been the rise of the mega funds like SoftBank's Vision Fund that has allowed companies to put growth first and profit second. So private investors have been very receptive to that. Now we're going to get an indication whether public investors feel the same way. So far, it seems like, at least for Lyft, they do want to get in. According to sources, Lyft is going to price above the expected range. But when it comes to Uber, which is expected to IPO in the next month or so, those losses are even bigger. And we reported on WeWork's financials last night, losses of nearly $2 billion last year. This is enormous, not just by private company standards, but by public company standards, too.
And Eliot, I wonder, does Lyft, for example, we could pair them with Uber, do they have... But Lyft specifically, since that's coming right away, does that have a path to profitability based on its current business model, or do they have to do things like raise prices in order to get there?
Yeah, I mean, that is the question. Certainly, like in their S1, which they filed, all the IPO information, it does not have, we will be profitable by this year, we project to be profitable. It's sort of up to the investors to infer, and there is not consensus on that. A lot of it is just how much does the war with Uber go on and over market share, which is where a lot of this money is going.
Yeah, Deirdre, same question. Are these companies that, in order to be viable, have to make less attractive, for example, pricing, the one thing that has drawn them so many users?
I think that's a really good question. And part of that equation is the drivers, their whole role in all of this. They're profitable if they can keep their drivers. And drivers, as we saw yesterday outside the roadshow here in San Francisco, Lyft's roadshow, you had Uber and Lyft drivers protesting. They're considered independent contractors. There's been some regulatory changes and discussion. If they're actually classified as employees in the future, that certainly affects the business models of these ride-sharing companies and thus their future profitability.
That is a great point. So, Eliot, finally, where does this leave us? So we can compare this to 1999. Obviously, that was a .com and IPO frenzy. Now, granted, the IPO ETF is having right now its best quarter ever. So you are seeing pretty good performance. We are seeing a lot of companies debuting, and we are seeing a lot of losses. But it doesn't feel like it did back then. Do you think investors are still just being too kind to these companies, thinking they're going to kind of be the next Facebook and Google and not remembering that even those companies are profitable by this point?
Certainly, that's a lot of what's driving it. There's just a lot of, we need to get into the next big thing. There's a lot of comparisons to Amazon. Will be the Amazon of transportation. Where it ends sort of lies with the fundamentals of the business and how much they can actually make per ride. Because right now, there's a lot of thought that they actually lose money on every ride.
Deirdre?
I think that's FOMO in the market now, right? You've never seen a ride-sharing company debut. And this is something new and shiny for investors. You don't want to miss out on it, especially if Uber, which is calling itself the platform, a transportation platform, and diversifying into so many different businesses, really is the next Amazon or Facebook.
All right, guys, thank you. Eliot, great stuff. Deirdre, appreciate it very, very much. Eliot Brown and Deirdre.